Hey guys, welcome back to this channel. Now, in this video, I'm going to give you a daily dose of copium and explain why the Bitcoin bear market isn't in. The thing is, everyone's been complaining so much because of recent political events with tariffs, talks of recession, but the thing is, what's going on with the price action is not really uncovering what the true undercurrent is. And the true undercurrent has got a lot more to do with the cheapness of money, more than it's got to do with anything else. And I've gone into this macro understanding in other videos, but in this video, I'm just going to dive straight into technical analysis. I'm going to make some macro videos a bit later. Now, I'm not really such a fan of just using technical analysis in and of itself, but I focus a lot on macro indicators in general, and I thought it'd be good to just show you what's going on in the charts so you can have a more concrete way of understanding what's going on. So the number one indicator I'm going to use here is I'm going to use the EMA ribbon, and it's going to give us a general idea of where the support is. Now, I've turned it up to the weekly time frame so we can zoom out and see how it's being affected on the long-term time scale. And pretty much ever since this EMA ribbon has flipped since approximately October 2023, we've been above this and we've been healthily supported throughout this entire time. So it's been about 2 years, and this ribbon has stayed intact. It hasn't flipped, although it has been tested quite a lot during this period in mid-2024 after our all-time high bonanza. But it looks like we're currently in a similar stage here where, what typically happens when you look at a chart like this, when there's a huge breakout, especially when there's all-time highs, there's going to be some kind of correction. And what will indicate is if we are in a bear market, we are going to fall below this ribbon, retest it, go below that for a period of time, and then the EMA ribbon is going to flip a few weeks later according to the weekly time frame. But we are quite far away from that. We are in this EMA ribbon still, and nothing has really occurred so far. We might just have to wait and see, as I'm someone that likes to look at the longer term time frame, because the shorter term isn't really going to give you any good indication about what's going on. It's just going to get you up in ante if nothing. But so far, we're looking fairly healthy. I would say that we're still in a bull market. And another thing I want to show your eyes here is this channel that we're trading in right now. So this is indicating a support and a resistance line that goes all the way back to March 2023. And we've already tested this bottom support now 3 times. The question is, are we going to break through? Now, look, again, I don't consider technical analysis sorcery. It's just that something's happened in a pattern in the past a number of times. Let's just say happened 3 times in a row. It's more likely than not that we're going to see a 4th bounce, even though that's not guaranteed to happen. Like, you can flip tails 3 times in a row. Just because you flipped it 3 times in a row doesn't make it less likely that heads is going to occur. So for that, I don't want to give you too much faith in just looking at it like that, but it's also just good to understand historical patterns. Like, if we've been in this trading range, since, early 2023, it stands to reason that this is a trend that if it does break, it's going to need to take a lot. Could it break? Sure, but again, the trend is in the favor of continuing this, and because we have hit on this bottom rung of support at 73k, I think there's a very good chance of a bounce. Now, before I go on, I just want to shout out my sponsor, Local CoinSwap, which is the best place where you can buy cryptocurrency without KYC. And if you buy on Local CoinSwap, you can use practically any payment method you want, regardless of your region. So in China, they've got Alipay. In Canada, they've got Interac eTransfer. They've got all the online banks from, Revolut, TransferWise. There's literally hundreds of different payment methods. And the problem is when you go to a centralized exchange, you've only got one payment method. You know what that is? That's bank transfer. And when you do a bank transfer, and also when you're providing KYC to the platform, all of your payment information is essentially being logged, and it's going to be made very obvious that you bought KYC. So if anonymity is your goal, you're not going to be able to achieve that on a centralized exchange. So you're going to want to buy cryptocurrency on a peer-to-peer exchange like local CoinSwap, where no personal information is required of you. There's also BitValve, which I highly recommend, and another one that's really great as well is one called HODL HODL. That's serves a similar function to local CoinSwap, except it's what you would call a non-custodial trading platform, and that simply means that your funds aren't stored on the exchange. So when you've got a peer-to-peer transfer set up between a buyer and a seller, the seller will send it directly to an address of your choosing, which presumably will be a cold storage wallet of your choice, and that'll help protect you. So just for whatever reason, if, you know, HODL HODL goes the way of Mt. Gox or FTX, whatever, you know, no one's funds are compromised in the end. So if you're interested, use my referral link in the description down below if you want a discount on the trading fees, and let's get back to the video. Now, there's a few other things that I want to point out. I've given you a slightly rosy image of what may happen to Bitcoin, but I want to give you some of the worst case scenarios that may play out. Something that is kind of a bit of a canary in the coal mine for me is these bearish divergences. So how it works is when you've got a high and then a higher high on the price. Let me just draw up this line. It's a bit wonky with drawing the lines at the moment. And then you've got a low and a lower low on the price. It indicates that there's a difference in the price versus the actual trading volume. It's indicating that there's some kind of discrepancy between these things, ultimately revealing that the market is overbought and due for a correction. So this is what we saw back in 2021, and I saw this looming on the horizon, and I wish I took it a little more seriously, because that's exactly what played out. You know, we got a super high on the RSI, the price hit an all-time high, we came down, corrected, yada yada yada, then we got a new all-time high, and then the second peak was much lower, and then we can see here that we popped up again for a little bit. This third high was, you know, much smaller, but we're seeing this bearish diversion play out as we started to go below this 50 line, and then the reality of this overbought situation was played out, and we went into the bull market. So essentially, we've got a similar situation brewing here, and I don't really like it. As we can see here, we've got this high and then a higher high on the RSI, as we can see here, but you know, the difference is here is that you know, we've got a high and a higher high on the price, and a high and a higher high on the RSI. That's what it should look like. That means that the market demand is proximate to what the actual price is. But here we've got this high on the RSI and then a lower peak here, and then we've got a high and then a higher high in the price. So that would indicate that we're likely to see some kind of major correction. As I mentioned, we're on the weekly time frame here, so this is a big deal. If we're looking at this in like a 4-hourly or a lower, like a smaller candle, it's unlikely that this would be such a huge deal. It would play out, you know, over maybe a few weeks or something. But considering that we're on the weekly, if this does actually play out, then this could be a monthly based thing, and this could indicate like a huge bear market that could last a while. However, let me also play devil's advocate here, and the thing is, typically we want to sustain an amount that's below the 50 line on the RSI, and until we do that, we can't say we're in bear market territory, and we certainly can't say that the RSI, the bearish divergence is playing out. So what I can see here, if I draw this line here, we've got a great deal of support ever since we've pretty much entered into bullish territory back in early January 2023. We have essentially been using this line here, not 50, but close, you know, around 47, as a retest line. So we bounced off it here in August 2023, then we bounced on it again July 2024, we bounced on it again August 2024, and here we are now. It looks like we're bouncing off it, and if we are able to get a bounce, get back over the 50 line, then we probably are in borrowed time. Like, this is not going to be a bull run that's going to last forever, but I do believe we've still got more juice, and as long as we remain above that 50 line, maybe we do print another little peak that further confirms this bearish divergence trajectory. But because, again, we're on the weekly time frame, it could take, you know, a while for this to really play out. It could be months from now. And during that time, you know, we could still enjoy new all-time highs. And that's really what I believe. I think that we are still due for all-time highs. And I think it's unlikely that the bear market is going to play out at this stage. But this is something to pay note to. This is something that is on a wider time frame, something that is concerning. But then again, it goes without saying, you know, the bull market is eventually going to end, you know, later on towards the year. That's kind of everyone's prediction. It could be a little bit earlier, it could be a little bit later, but this is, to me, more of an indication of what's going to happen like 8 months down the line, in my opinion, unless, you know, something horrible happens soon. But who knows about that? And we can also see down the bottom on the wave trend indicator, a similar kind of thing happening. So when you see a red dot, you know, above this 50 line here, that indicates an overbought situation as well. Some people like to do this in a very haphazard way and just sell when there's a red dot above 50 and buy when there's a green dot below the negative 50 line. I don't go that far. I need to emphasize, I don't consider this a science. But yeah, it is worth paying attention to that we are kind of in this downward trajectory. But we see a similar thing with the RSI. We've gotten, you're pretty much at the exact, like, you know, around like -7 on the wave trend indicator. We've got a bounce, and pretty much we have not gone sufficiently below the 0 line, you know, past February 2023, which is pretty much when the bull market started. So I would guess that we are going to get some kind of bounce at some stage, just based on previous performance. And pretty much for as long as we're above the 0 line, we're essentially bullish for all intents and purposes. Once we're below 0 on the weekly indicator, that would, you know, and in a sustained way, if we remain down below the 0 line, that is going to be, we're in bearish territory. We aren't there yet. So, but we're going to have to see. It's cautious. I'm optimistic, but I'm also cautious. The next thing I want to look at is the BTCD. Now, the BTCD is an important indicator to look at, even if you're not into altcoins, simply because altcoins going up pretty much means everything's going up. If Bitcoin dominance is going down, what that means is there's less Bitcoin in the total, making up the total percentage of the cryptocurrency market cap, and more of those are in altcoins. And as a result, altcoins go up. And usually, if we're just in a bear market in general, regardless if it's an altcoin or Bitcoin, Bitcoin dominance goes down. Now, it has been a real buzzkill and, you know, real blue balls moment for people that have been trying to anticipate the altcoin market, because it really seemed like we were going to do it. But we just haven't really done it so far. You know, we're in this trading range for quite a while, and we broke below it only to have Jeremy Powell come and just give, you know, just not basically trying to print, you know, free money, you know, helicopter economic style, like he would have in the past. And as a result, you know, we broke back above this this line. You know, when we broke below it, everyone thought, oh, let's load up on meme coins, and then everyone got wrecked as soon as Jeremy Powell, you know, indicated that he wasn't just going to start, you know, lowering interest rates like as it is expected. So we've broken back into this trading range, and as a result, I can't say that the altcoin season is around the corner. It looks like we are going to continue to respect this trading range. So I can't say that massive parabola is around the corner. I mean, the point of this video is to just hopefully convince you to not bloody sell your Bitcoin. That is absolutely financial advice. You can put that on my tombstone if you want. Don't sell your Bitcoin. That is financial advice. You know, I don't think we're in a bear market. That's a bare minimum. But yeah, I also don't necessarily believe we're on the cusp of some huge altcoin market. Although it would be better to buy now than, you know, buy later down the line if you believe it's going up. But at the same time, we are really respecting this trend line, and who knows if we just continue to go up in the Bitcoin dominance. So rest in peace, Ethereum holders, rest in peace. Solana holders, rest in peace. All the meme coin holders, I think we're all screwed. But maybe not. It's not certain about that. In fact, I actually will give you a little bit of copium. So as you can see here, the Bitcoin dominance has been going higher and higher. But what have I just taught you about the RSI? What happens if we get a peak and then a lower peak on the RSI, but get a high on a higher high on the price, well, that indicates an overbought scenario. So the same dynamic, I think, is likely to play out at some stage. In my opinion, this situation will no longer be sustained. We are probably going to have the RSI break down below 50, and this bearish divergence will play out. Similar to what I described before with Bitcoin, it's probably not going to be soon. It's probably going to be a couple months down the line, probably close towards the very end. In fact, that's something that I can predict. I believe that the beginning of the end of Bitcoin will be when the altcoins start ballooning, because they've got a similar kind of scenario playing out. The Bitcoin dominance chart's kind of similar to the BTC USD chart. When they once the RSI starts going a bit funny, going sideways, going down, BTCD is going way down. BTCD is going down, which is going to be great for alts. But that's probably going to come towards the end, and people are going to get absolutely smoked because people only buy when it's high instead of it being low. Now, the last thing I want to talk about, it's frankly, I don't know why I didn't talk about this at the very beginning. This, to me, is my biggest copium. I really do think that we are going to change course soon enough. I don't know exactly, maybe like a month or maybe even a month and a half from now. And that is because of my best friend here. Say hello to the hash ribbon indicator. I haven't pulled out this bad boy in a while, but this thing has probably it's the best indicator I've ever used. It's really, really bare bones. It doesn't require much explanation, although I will explain it. But pretty much if you take it on face value, it just says a buy signal, and then the price goes up, right? So every time you get this, you print this buy signal, you get this big, beautiful blue dot, we eventually go up, often not going back to the price levels that, the blue dot was originally at. So here we go, it goes up. Just, you do it for me. Just look at yourself. Every time you get a blue dot, the price goes up. There are some blue dots that are better than others, like this one in, August 2021. It wasn't the best, but the price did go up. Generally, I find this is a very promising indicator, and it's worked for me very well many times. Now, let me explain how this works. So basically, this is a measurement of hash power. And it's kind of like two moving averages, and when one moving average goes below another moving average, it indicates a situation called a miners capitulation. Now, what a miners capitulation is when a certain amount, like maybe I think it's like a percentage of miners become unprofitable to the point where they kind of go out of business, and their hash mining power is basically taken off the network. Now, this typically indicates like a bottom, and when it comes to the price for various reasons, because kind of it's indicated that pretty much like when it's no longer profitable to mine, and a bunch of people exit the market, it's now profitable for new miners to come in and fulfill that spot. But also just, I don't know what it is. You know what? Maybe I can't even explain it that well. But when this situation arises, it just indicates that it can't really get any lower. And, so I remember like, what's his name? Max Kaiser. He was doing some like podcast, and, someone was talking about, what's your prediction for the price of Bitcoin? And Max Kaiser gave like a very astute point. He's basically like, look, it doesn't matter what the price of Bitcoin is. The only true indication of the bullishness of the market is the hash power. And the hash power is basically the total amount of computational power for the Bitcoin network. And basically that has been permanently in a bull run. So if you measure the growth of like any network, like say a social network, it's always been measured by how many users have signed up. So the more users that signed up, the more profitable it is, the more it's growing. That's like the best indication you have into whether or not you would invest in Meta or Google. Like how many Google accounts are there? How many this accounts are there? That, So you can look at, Bitcoin wallet addresses. They've definitely been going up. But Max Kaiser would recommend that the best thing to look at is actually Bitcoin hash rate. So as you can see, it's just been constantly going up and constantly going up. And it goes through periods where it does go down. So as you can see, those little red lines on the chart, those are the miners capitulations that I've talked about. That indicates the hash ribbon has gone down. A bunch of miners got wrecked. They're no longer profitable. Maybe they've gone bankrupt. Who knows? They've sold out. But those events are actually extremely rare as a total percentage of all of Bitcoin's existence. Like, the amount of time where the hash power has dropped is very temporary. It never lasts long. And when these things happen, they also tend to coincide with a significant price drop. And then when the hash power starts going back up again, we go back into this green line, the price tends to rise. But the point is that these little mining capitulations, they indicate a bottom. It indicates it's a bottom because it's a really rare opportunity where the hash power actually goes down, which never really happens. It's guaranteed to go back up just because of the history. It always goes back up. And when it does, it kind of comes back with a fury because then you've got all these, miners coming in, etc., etc. And yeah, it indicates like it gets, it always gets better. I mean, as long as the hash power goes up, that's all you really need to know. And cutting to the chase, let's just get into it. What do we see here on the far right? We get another mining capitulation. So we get this gray dot. It says capitulation. I know a lot of doom and gloom. Frequently, when there's capitulation, it's accompanied by a huge drop in price, which is what we had. We had this huge drop in price, which is aligned with this capitulation situation. And usually, this buy signal that you see here is when the moving averages kind of go back to where it was before, where we go back into a bullish state where where hash power is no longer being lost. Now additional hash power is coming back and we're going back into a mining state. And that only ever really lasts a month. I remember waiting for one that was like 2.5 months. It was way back, I think, in 2021. How long was that? So the longest I've ever had to wait for, hash power to become bullish again was, so from May to, like, what is that, August. So like 2 months is the most you've had to wait for like hash power to get back into a bullish state. So we just started this like a week or two ago. So, we've got a bit of a ways to go. I mean, it could be another month from now. Who knows how long. But I would really guess this is the bottom just based on this indicator alone. So guys, if you like this video, make sure to use my referral links in the description down below. I've put it in the comments section. I'll put it in the description as well. Use my referral link in the description down below. And make sure to subscribe, and I'll give you more awesome information about what's going on. So I'll see you next time.